The Government of India is intent on privatizing IDBI and completing the process at the earliest.
Big monopoly corporates, both Indian and foreign, are greedily eyeing the vast financial resources and real estate assets available with Indian public sector banks, PSBs, and insurance companies. It is under their dictate that the move to privatize IDBI has been initiated, and if successful, the GOI has already indicated that other PSBs will be next in line.
Before we examine the IDBI bank privatization, let us first look at the corporatization attempt of the 7 railway production units of the Indian Railways in 2019. When the Modi government returned to power in May 2019, Railway Minister Piyush Goyal swiftly announced a 100-day action plan. Hidden inside it was a move that triggered panic across the railway workforce. The corporatization of 7 production units, including ICF, maker of the Vande Bharat trains, along with CLW, DLW, RCF, MCF, DMW, and the wheel and axle plant. Workers immediately understood what this meant. Corporatization today, privatization tomorrow, and job insecurity forever. And the irony, these units were not loss-making. They were global benchmarks. ICF had built Vande Bharat without needing corporatization. CLW was producing some of the world's best locomotives. RCF and MCF were manufacturing LHB coaches at unmatched cost. Yet, the government wanted to corporatize them, and employees saw this as the first step to fragment the Indian railways. What followed next became one of the biggest resistance waves in recent public sector history.
Nationwide protests erupted in all the production units.
The workers threw aside their differences based on union affiliations and formed joint action committees at all the production units. They realized that only a united action of the workers could stop the authorities and force them to roll back the corporatization plan.
They mobilized their families and descended on the streets in their tens of thousands, organized gate meetings, rallies through the colonies and on the main roads, and they get out the administration. Slogans echoed across factories that normally echoed with machines. MPs were pressured, ministries were flooded with objections. The resistance grew so powerful, the government had to back down and assure the workers that nothing would be done without consulting the workers. This pushed the corporatization plan further into cold storage, and soon the proposal quietly vanished.
The result was historic. Railway workers successfully stopped the corporatization of 7 production units, unity won where policy seemed inevitable. But while the railway issue found a pause, another story was accelerating in the financial sector. Privatization of IDBI Bank. IDBI, originally an industrial development financial institution, became a full-fledged bank, and by 2019, LIC acquired 51% while the Government of India held around 45%, giving them nearly 95% combined control. Then came the decisive movement. On May 4, 2021, the government approved the strategic disinvestment and transfer of management control of IDBI Bank. This wasn't partial dilution, this was full privatization. Around 60.7% stake, 30.48% of Government of India and 30.24% of LIC was put on sale. After this, LIC would remain only as a public shareholder with capped voting rights, and the new buyer would fully control the bank. By 2025, the process has reached the advanced stage. Bidder shortlisted, security clearances done, due diligence ongoing, and final financial bidding expected soon. IDBI Bank is on the edge of a complete ownership shift.
Just as in the railways, the government is attempting the same in banking sector. IDBI is only the test case. The government has already signaled the privatization of many more public sector banks. Though the names aren't officially declared, the finance minister has confirmed that the mega merger agenda is on table. The direction is clear: 1 bank today, 2 banks tomorrow, more banks later. This is the same step-by-step method seen earlier: corporatization, disinvestment, and eventually full privatization.
This is why the development that happened in the railway sector matters so much today. 7 railway production units were saved for one simple reason: lakhs of employees stood together. They did not wait. They did not assume someone else would fight for them. They took responsibility. They organized. They resisted with discipline, coordination, and conviction. Their unity forced the government to step back from a major reform. IDBI Bank employees and PSB bankers must understand this lesson now. Awareness must spread. Just like railway workers circulated every update to every employee, Bankers across unions and PSB must unite instead of acting in isolation. Public pressure must be created by explaining how privatization impacts rural penetration, service charges, priority sector lending, and long term job security. And yes, if required, a strategic, unified strike like railway workers threatened can become the turning point. The railway struggle is not just a memory, it is a warning. If IDBI employees want to protect their institution, they must act with the same unity railway workers displayed. Because once IDBI is gone, some more PSBs will follow. After that, others. The future of public sector banking depends on what IDBI employees decide today. United workers can stop privatization, silent workers cannot.